Okay, so let's start here. Thank you for joining us today. Thank you everyone for attending, and thank you to FX Street to give me the opportunity to speak. Okay, my name is Telmo Pinto. I'm the founder and director of market operations at Intuition Trading Group. For those who are unfamiliar, we are a team of professional traders dedicated to provide simple, real-time and unified trading solutions for investors. Today, I'm going to talk about the US market's effects on the world markets. Is intermarket analysis is a good topic, okay? And can give us some hints on how we can see a possible trend on the market or diversions on the market, reversals points, and is a very different way to see the markets. Okay. Before that, let me speak here just a little bit about who we are. Okay, we provide trading services to our clients. We have forex managed accounts, but our main core business is the trading signals. Okay, these signals are automated to MT4 platform. So you can see all on our website, intuitiontrading.com, or at fxstreet.com on the services directory. Okay, there is all info there. If you are an fxstreet.com user, you can have a 10% discount on the fees. You have there all our statistics. Okay, our average is about 6% per month. Okay, till now, till inception. So if you have any questions, please feel free to email us. Regarding the new software and regarding the webinar, if you have any questions, please, you have on the right, you have the questions and answers. You can put your question there, okay? So I will answer it to the audience, or if it's a private, I will do it privately, okay? So let's start here. Okay, let me introduce here the major US indices, okay, or index. Okay, we have three major index in the US, and they are the Nasdaq. Okay, the Nasdaq is the American Stock Exchange. Okay, it's the second largest stock exchange by market capitalization in the world after the New York Stock Exchange, and mostly is the tech. Okay, is the tech stocks or the technology stocks. And you know that in our days the technology is around us. We all have mobile phones. We have pads, we have notebooks. Okay, so the technology is all around us. So these companies play a major role in current economy. I read about 2 weeks ago that, for instance, the Apple, okay, with the new launch of the iPhone 5, the sales can produce about 1% of the US GDP, okay, or can affect the US GDP. So you can see the weight, okay, of one single tech stock can have in the world's greatest or biggest economy is the US. Okay, we have the China, but the US is the world's biggest economy. Okay. So if one stock can affect the whole GDP, okay, the gross domestic production of the major economy in the world, the indexes can affect all economy, and it's what I'm going to show you how we can use this in our advantage. The other US index is the S&P 500 or the Standard & Poor's. Okay, have the 500 trade American companies. This is most people or most investors tend to watch the Dow Jones Industrial Average, is the last index I'm showing you the slide, or the Standard & Poor's 500. Okay, although with the new change of the economy, okay, the Nasdaq play a very important role in the market or in the economy due to the technology. Okay, so if you watch the Nasdaq, okay, and Nasdaq is faster than the others too. Okay, if you watch the Nasdaq, you can predict more or less, and comparing to the Standard & Poor's or the Dow Jones Industrial Average, okay, you can see or predict how markets can behave on the U.S. session. Okay, so instead of only looking to S&P 500 or to the Dow Jones, it's good to watch the Nasdaq too. Okay, so the last index is the Dow Jones Industrial. Okay, is the index that show the 30 large publicly owned companies based on the U.S. And is the oldest, okay, was created by by Charles Dow, and is one of the several indices created by the Wall Street Journal. Instead of doing here, okay, the concept and etc. only theoretical, I like to put things, okay, on practice side. Okay, I don't like too much the theory. I prefer to see things on practice. Okay, because I think the practice is preferable in order we can achieve our goals, or in order we can achieve our or we can fulfill our important things. Okay, so I will go here to this is the index. I will go here to let me only close this. I will open here the platform. If you don't have, okay, if you are not a futures trader, okay, or you don't have access to platforms like TradeStation or any futures broker, okay, you can see most of the current FX brokers, they offer the CFDs trading or even futures trading. Okay, and you can have there free, okay, the quotes of the futures market. Okay, so there's no need you subscribe a package, okay, to have this, or if you have websites too that can provide you this info, because what I'm going to show has nothing to do with indicators, okay? It's only by observation. Okay, okay, manage panels, okay, this is okay. Only I want to put here the question and answers, okay, great. So, this is, for instance, this is Alperi, okay, a demo account. Here we have and they allow us, if you open their demo account, okay, you have there the US futures, okay, and on the beginning, what you need to know is where the price closed yesterday, okay. So we define, and we can draw a line here where the price closed yesterday. This is the agreement on price, if price go up or if price go down. Okay, if market is up or if market go down. And is our send line. I used to say this is the sand line here. Okay, I don't look at the chart with a percentage. I prefer see by points. Okay, if market is up, okay, 5 points, 10 points, 20 points, or if down 5 points, 10 points, 20 points. Okay, you draw there, and only with this line you have an idea how market can bounce from the yesterday close. Okay, as you can see here, this is the yesterday. Okay, market went down. Yesterday was a good example for what I'm going to show, and I show you later on the webinar. Okay, this was the close of yesterday. Price went down here, retest the zero level, then go down, and now are retesting again. Okay, if go up or if go down. The first 30, 45 minutes on the market, they are not important for this observation, because on the 30-40 minutes, okay, we have news coming out. We can have news at in the first 30 minutes of the market. There is too much noise on the market, so I prefer to give the market that time to breathe. Okay, and at 45 minutes after the market opens, okay, I define, or I look at the Nasdaq and the S&P 500. Okay, on the left we have the S&P, on the right you have the Nasdaq. Okay, here on the chart, this is a 50-minute chart. You can put 5 minutes, 50 minutes. Okay, you can define then what is more comfortable for you. So after 40 minutes, 45 minutes, I look at the charts and we have an idea how market, okay, can behave for the rest of the day. And the idea is, and this is made by observation, so you can have a paper, okay, or you can have an Excel tab, okay, where you write the values. You have 4 or 5, okay, options that market are doing at that time. Okay, market can do that time. You can have the Nasdaq, okay, up and the S&P down. You can have the Nasdaq up and the S&P up. You can have the Nasdaq down and the S&P down. Okay, and then you can have the S&P above 10 pips or 20 pips, 20 points, or down 10 points and 20 points. But let's do this from the beginning. If 40 minutes after the market opened, 45 minutes, you see that Nasdaq, for instance, is up, okay, is positive, and the S&P is negative. What you should interpret is that, okay, there is clearly a non-definition. Okay, market is completely undefined. We have one index positive, we have the other index negative. So you need to wait until you see if the two goes positive or if the two goes negative. Okay, if Nasdaq is positive, you can interpret that, okay, if Nasdaq, for instance, go up another 5 or 10 points, or if Nasdaq is up, okay, double digit, you can interpret that, okay, the S&P will follow, and the consequence for that follow is that, for instance, the euro dollar will go up. Okay, I'm going to put here the euro dollar too, in order you see. Okay, let me open here. Okay, as you can see here, the behavior here of the euro dollar and the Nasdaq was practically the same in the Standard & Poor's, okay, and the S&P, but mostly, okay, when the US index go up, you see that, okay, the euro, is the right chart, were not able, okay, to make new lows. So this last move, let me open with the other tool that, okay, this software can provide another tool, which is great, this annotation. If you have any questions, please feel free to ask, okay, because this is very different concept, and I'm trying to explain you the best I can, okay. So if you have any questions, please feel free to ask. I'm here to answer all your questions. I'm trying to explain the best as I can, because this is observation, okay. This is not strictly rules. You can define strictly rules. I'm going to give you some strictly rules, okay, some rules you can follow, but this is made by observation. And as you can see, the observation is what the eye meets, okay, or the eye can see. So let me put here, okay. You can see here, we have the Nasdaq testing here the zero level, okay, but made here a lower. The S&P didn't follow, okay, and you can see the euro didn't follow too. So what we can interpret from this is that, okay, Nasdaq was down, tend to go down, couldn't lead the Standard & Poor's, okay, the S&P to make new lows, okay, and that will have a cause effect on the euro that holding this and now is going up. You see here that now is going up, and the S&P is going up too. Let me clean this level here. Sorry. Okay. So, as you can see here, for instance, is that Nasdaq couldn't lead the Standard & Poor's, okay, that create a correlation on the Euro-USD, couldn't lead the Euro-USD to make new lows. Although, when the market begin to tend go up, you see that Euro is going up too, because Euro most of the time, okay, will replicate the movements of the Standard & Poor's, okay, of the S&P. And if we have a tool that can tell us, okay, that Standard & Poor's or the S&P will move up or down, we then have a tool that can predict the moves on the euro-dollar. Okay, so this is all correlated effects of the US market, for instance, in the euro-dollar. Okay, as I mainly trade the euro-dollar, I use this tool in order, okay, to see where might the price go, or levels to define where might price go. Okay, although as I trade the pair, I trade mostly the pair. Okay, I need to have another tools, okay, to define the entries and exits on the pair. But this can give us an idea of what the market can do. Okay, so this is the main thing you can, okay, this is the first impression you can see on how you can interpret a market. Okay, so we can define, let me clean this, okay, clean all, okay, let's put here. Okay, so this is the sand line for today, okay, on the Nasdaq. I want to see, or I have three levels for the index, and the levels are the 10, okay, this is close about 34, so 12734, okay, this is the 10 points, okay, and we have here the minus 10 points, and we have here, okay, the 20 points, and below the minus 20 points. Okay, but market is moving up, so let's see. If at if after the opening about 40-45 minutes, we for instance see the Nasdaq above the 10 points here, okay, and the Standard & Poor's below the 10 points level, okay, what we can interpret is that, okay, Nasdaq can lead the Standard & Poor's to go higher. And what I usually do is expecting a go to at least the 20, okay, or the 50 points here. You can make here mid levels. If the Nasdaq go, for instance, to 15 points, sorry, and the the Standard & Poor's could go to 10 points, I can expect, or 8 to 10 points, I can expect that we have a further up move, which correlated to the euro or the other asset you are trading, instrument you are trading, can lead that up. Okay, this is first primary rule you can have. Okay, is the Nasdaq above 10 points, the S&P positive but not above 10 points. If you see at least 5-8 points on the Nasdaq, we can interpret, okay, market can go further up. We'll then have, of course, the resistance of the 20 points on the Nasdaq, but can have a lead, or can lead the other instruments to go up. The opposite applies, okay? If you have Nasdaq negative more than 10 points, and you have the Standard & Poor's negative but less than 10 points, okay? And if Nasdaq continues the move, you can have a further down move. A good example was the yesterday, okay? Let me open just here. Yesterday was a very interesting movement. We have here, this we can, let me put here, this is the close, okay, of the Nasdaq. Here, this is the close of the Standard & Poor's around this level. Okay. At this level here, we have the Nasdaq falling around 10 points. Okay. Then try to retest, but then go down again. Okay. At this level here, we have the Standard & Poor's dropping only about 3 to 4 points. This was the beginning of the session, okay, was dropping about 3 to 5 points. When I saw this, let me put here the annotation, okay, annotate. When I saw this fast move, we have this fast move too on the Standard & Poor's, but we know that the Nasdaq was losing more than 10 points. Okay, so when we see about 5 points here of the drop, we can interpret, okay, this is going to go further down. Okay, which lead the S&P and with consequence lead the euro dollar down too. So yesterday was a very good example of how the Nasdaq can lead the S&P and then have the correlation to the other instruments, okay, or the euro ST in this case. The Nasdaq was clearly around 10 points negative, okay. The Standard & Poor's was barely negative, okay, was 2 points, 3 points, 2.3 points. And after that, after a break of the 10 points negative, I remember that I was showing this in real time, and when the Nasdaq break the 15 points level, the Standard & Poor's accelerate big, and instantly was went to -10, and Nasdaq continues to -20, remain there, and then goes to -40 points, but leads the Standard & Poor's, the S&P, to go lower, which lead, let me open here the Euro USD so we can compare the three, which leads the euro that was testing at that time the 129, is here around this level, that was testing the 129 area, and was the clear break of that level. When we have the agreement of the other side, the indices, the market went and break the 129 that was forcing there, at that time, testing, and clear break, and then made the the 128.80 area, 70 area, So, as you can see here, with one single observation, in this case the drop of the Nasdaq, that was telling us, I'm double digits negative, I'm losing more than 10 points, so the S&P was not in agreement, was barely, was losing about 2 points, 3 points, when Nasdaq when Nasdaq further down and accelerate the movement, and goes to -50, we saw a drop of about 9 points in the S&P, and a break of the 129 that was resisting at that time, was a big support, of the euro, and break that level and goes to 128.60, 70 area. So this was mainly by observation. This is observations. I'm not telling that if we'll have these moves continually, but they are proof that they are correlated, and if you can observe this, we have another tool to interpret what market can do. But most important, and I use this tool most important, to see a possible range or non-defined day. Because, on trends, you can enter, follow the trend and make money. But on ranging, we get sometimes caught, or opening our trade at the tops or at the bottoms of the price. And we don't want that. You want to, for instance, if you are buying on lows and sell on tops, on highs, So, and that we can see, and the rule is we can apply is, if we see a divergence on the two indexes, if you have the Nasdaq, for instance, positive, and the Standard & Poor's, the S&P, negative, we wait until we see a move in agreement in order we can enter on, for instance, on S&P, if you trade the futures, or on euro-dollar if you trade the forex. Let me do an example, a clear example. 40 minutes, 45 minutes after the market open, we have the Nasdaq negative, and you have the S&P positive, If the Nasdaq, for instance, go down, further down, and can break the -8, -10 points, and leads the Standard & Poor's, the S&P, to go down, you can interpret that we will have a movement to go down on the Euro USD, But until I see this, I prefer to step aside from the market, and see where will they go? Okay, when it will be in agreement. Another aspect, in this case, okay, or in other case, we can have the Nasdaq negative, the Standard & Poor's positive, okay, the S&P positive. If Nasdaq go up, okay, and can surpass the positive value of the Standard & Poor's, for instance, the Nasdaq goes down, is down, then go up and pass, for instance, the 8.5810 points. This we can interpret, okay, that Nasdaq is reversing, okay, go up and lead the S&P to go up, which can lead, okay, a further up movement in the Euro-USD. Okay. Jack 1, why does the NAS lead S&P, the Dow leads, Dow only get 30 stocks? Okay, this is very curious question. The Nasdaq, I begin the webinar telling that, okay, we are in a tech world, okay? We can go against that. The Nasdaq has larger movements than the S&P, okay, in terms of points. I look this, and I begin saying that, I look in terms of points, not on percentage, okay? And it will lead because the main reason is that the tech stocks or the major Nasdaq stocks, they are included on the S&P. Okay, so if you see, for instance, Apple, okay, is the heaviest stock you have currently on market. Okay. If Apple is strongly up or strongly down, it will affect the index, okay? And if affect the index, will affect the whole movement, okay? So the Nasdaq is also faster to react than the S&P or the Dow or the Dow. Sorry. So we took this advantage of the fast market, okay, of the fast market, in order that we can see the others that are lagging a bit, okay, or they are lagging, and take this advantage in order to do our trades or see the possible market movements. For instance, now, and this is real time, you can see here, okay, you saw that Nasdaq tried to go up, but didn't break the zero level. Okay, Nasdaq, S&Ps go down, but this not telling anything. This is only telling, okay, that Nasdaq is not willing to go up, and if we see a continuation of this down movement, okay, can lead the S&P, the S&P to break this level. Okay. And this is done by observation. If you tell me, okay, there is any specific rule or math rule that explain this leadership, if you can say like that, this leadership, no, there isn't. Okay, there is some points, and I explained to you that, okay, this can interpret the leadership of the Nasdaq. For me, in my opinion, and I'm purely a price action trader. Okay. I don't like to use any indicators. As you can see, I only define these levels to show you, but I don't use any indicators. I use market sentiment indicators, and this is purely, okay, another way to see the market sentiment. Okay, this is a different tool, but it's another way to see. You can see the market sentiment. This is the fast way that Nasdaq moves, that can lead the other index, and that have a cause effect. Okay, the S&P has a cause effect on the, for instance, Euro-USD pair. Okay, like I show you. But there isn't no specific rule regarding, or I can tell, okay, this lead because of this specific rule. There isn't, okay, or at least I couldn't find it yet, okay. And this is done only by observation, like I explained to you all. This is done by observation, okay. I hope you understand the explanation. Okay, I know this is not, probably is not you'd like to hear, but okay, is the only I have. Okay, there, because this is the market, and this is the way the market moves, and this is purely an observation of the market. Okay, observations of the market that you can see every day that okay, they are playing an important role to the market. Okay, so this is the mainly concept. Okay, to go in resuming here. Okay, is important you 40-45 minutes after the market open, you see the where S&P is and where Nasdaq is. Okay, if you have the two in opposite sides, if you have Nasdaq positive and S&P negative, or the opposite, you can interpret that okay, market is undefined, so I will wait to see where they might go in order to take my trade. Or if you are in a trade, you can see, okay, let me see if I could my stop, or if I see a signal of reversing to close my trade, or partial profits of my trade. Okay. If you see that Nasdaq can pass the 10 points and the S&P is barely like was yesterday, okay? Nasdaq, yes, the S&P yesterday was barely negative, but Nasdaq was losing 10 points at a time, 11 points, then go further down, and you have a very good movement on the S&P and a break on the Euro USD, okay? You can interpret, okay, yesterday, for instance, was a down movement. You can see an opposite and see an up movement. Okay? If you see, for instance, and this is important too, the discount of overbought and oversold markets. Okay? The important is the ranging, but also the overbought and oversold on market. And what we can interpret is if we see 40-45 minutes or during the day, the Nasdaq, for instance, passing the 20 points up or down, and can hold that level, can go okay further up or further down, like yesterday happened. Okay, yesterday they break the 20s and then again, and then was testing the 30 level. When we see, for instance, and okay, it will happen on reverse of the trends. You will see this on reverse of the trends. You have a break of the 20 points up or down. Then market can go further up or down. Okay. If during the session you see that Nasdaq is able to break the 20 levels in the opposite side. Okay, let's do an example, a buy. Okay, we have the market in upside. The Nasdaq go and pass the 20 points. Go to the 30-40 points, okay, around that level. At some times of the session, if we see the Nasdaq breaking low the 20 points positive, we can interpret this as a weakness of the market, okay, and a possible overbought level of the market. And if you see, for instance, that Nasdaq go further down and can go, for instance, to 15 points positive, then go and test the 20 points, and couldn't pass up again, we can, interpret as, this is really a overbought situation on the market, and I'm willing to short that level. And you can short that level and, or see possible levels in the instrument you are trading, if it's the Euro-USD pair or if it's the Standard & Poor's futures, to short the market and go with the weakness of the Nasdaq that can lead the other instruments. So this is very important to also know that or to see the overbought, oversold levels of the market. So this is the mainly the mainly situations, these two, that I'm expecting to see in order or to close my positions or do some or reversing my positions, if I see that instrument is following, because this is done by observation. Again, this is done by observation. There is no indicator that if market goes down if Nasdaq goes down and touch the that level, then we enter short. No, it's not like. You see, this is a purely observation of the market. This concept can be complicated now, but with time, with screen time, and we can put a paper on the side. And you can write, for instance, the 15 minutes or 5 minutes or 10 minutes levels, the close of the bars, and you see that you have a pattern. You have a close of, for instance, 10 points positive, 12 points, 50 points, then 12 points, then break again the 10. Then if go down again, can lead the others to go down. So any questions? I know this is a very different concept. Is somehow strange how the Nasdaq can lead the S&P and the S&P can lead the S&P leads the world. Is common no, because it's the most viewed index, the S&P and the Dow. But in here we have a tool that we can see where might the S&P goes, and if you see where might the S&P goes, we have an excellent tool to see the rest of the world in this. I know this is not very not very easy to understand. It wasn't for me too, and and I have some. I'm not based my trades, or I don't trade based on the observations I do with this correlation, But I look because this tends to be effective, and yesterday was very effective, and these situations is good. For instance, yesterday I was short on the euro pair, and when I see and when I saw that Nasdaq was minus 11, minus 12 at that time, and the S&P was merely negative, and Nasdaq accelerated, I knew that euro is now going to break the 129 area. So this is good in order to see, let me do partial profits here, because I have this observation that can lead to market go up or go down. You can use this in order you see another. This can be another tool in order you see if market is able to break the levels, or if you're going to resist, if you create some resist, or if possible in a range. If you see S&P up and Nasdaq down, or the opposite, is better you stay aside. Okay, step aside and see if they are in agreement. You have the levels I told, okay, the 10, the 20s, okay, to see if market is able to go to that levels and break the continuation, okay, and do the continuation of the trend. If you see an overbought and oversold position, you now can see, okay, this is a possible reverse of the market. Okay, the 20 points is important to see the reversal of the market. So this is, okay, go and see. Meanwhile, what is the, you don't need to subscribe. Okay, you have, for instance, Alpari, you have this in real time, as this is not important to be the precise, okay, because this is not the futures itself, not the futures feed, but you can see, okay, how the market is moving, this, and you don't need to pay any fee, okay, for it. Any questions you have? Maybe we have plenty, okay, but okay. Okay, I think there is no questions. Let me open here, okay, this screen. Okay, so, okay, time flies again. Okay, no questions now. Great. Okay, so I made a resume. If you have any questions, okay, I'm more than to help you in answer your questions. Okay, you can email me at tradingdesk@intuitiontrading.com. You can go to our website to see our service that we provide to the mainly forex traders. Okay, I can understand this is a very different concept that you are used to, but is a tool that you can use in order to see some particular situations of the market. Okay, so I hope you all have enjoyed the session. I will be again with you at Friday on the In the Money webinar. So have a rest of pleasant and nice day. Okay, thank you very much and bye.